Hi everyone and welcome to today's morning report with me, Richard Perry, Market Analyst at Hantech Markets for Tuesday the 13th of May. The handover that the European trading session has had from Asia and also Wall Street has been a very positive one actually, with Wall Street indices pushing higher pushing into all-time high ground. Both the S&P 500 and the Dow both achieved closing all-time highs. Now that's certainly helped the Asian markets also into positive territory. The Nikkei was just under 2% higher, and that was also helped by the fact that the yen was weaker overnight as well. And also the Indian stock market as well, pushing nicely higher as the exit polls from the general election suggested that the pro-business party headed up by Mahendra Modi Narendra Modi was going to be into power, so that was a positive for the Indian market as well. But what we're seeing is gains early on in the European stock markets, and they are looking to try and break to the new high ground as well. FTSE 100 is right on the cusp now. 6876 is that limit, and it's pretty much bang there now, and the DAX etc. as well. So these markets are looking to replicate these gains on the Wall Street. But one of the interesting factors that I noticed has been this VIX index that has had a sharp breakdown, which suggests very low volatility and almost back into the realms of complacency once more. So we need to keep that in mind. That is now at the lowest level since January on the VIX, and although that doesn't necessarily mean that there's going to be a sharp correction in due course, it's something that we need to keep in mind as volatility goes towards the extreme levels. Around about that 12 mark seems to be where the extremes in the VIX index have happened over the past year. So that is something that we need to keep in mind. Dollar index from yesterday continues to just slightly come off the top, having had that sharp recovery on last week. The key data that we need to be looking out for today is the German ZEW sentiment. That comes out at 10 o'clock, and the expectation is for a slight decline, actually further decline back towards 41, but it's still up towards decent levels here, but it could ideally do with an arresting of that decline. So a bit of support maybe coming in around about that 40 mark would be positive, but certainly in light of the assertion from Mario Draghi last week that the ECB was ready to act and comfortable to act, certainly a positive ZEW would benefit the euro probably quite strongly there. So watch out for that at 10 o'clock. Also, we've got US retail sales this afternoon at 1:30. 0.4% on the month is the expectation, and 0.6% on the month if you take out autos. So that's the data that we need to be watching out for. My chart of the day, as I said earlier, FTSE 100 is in a strong position, really looking to test these highs. Now I've taken this is on the daily chart, and it really is looking to test that key high that we saw back from May last year, 6875.62. It is currently 6874.38, so it's not it's so close, but it needs to continue to break out. If it broke out, then that would reopen the December 30th 1999 high of 6950. So that would be an incredible move, certainly for the FTSE. We've seen this series of higher lows here in place. You continue to come back towards this primary uptrend and use that as support. You've got the nice bullish moving averages here in place. You've got this RSI, which is up at 68. It can get above 70, so there is scope for this move and a breakout. And the MACD lines and stochastics are also in positive configuration as well. So you've got a lot pointing towards the positivity in the FTSE 100 at the moment. If you look on the intraday level, We've seen this consolidation period over the last couple of weeks, and it's now broken out. So you'd certainly say that it's been a strong move at the open, and it is now really testing that level of 6876. Now, in terms of support, you'd certainly say there's a nice band of support between 6,800 and 6,840, with which to use that as a base of support for corrections, and these intraday indicators are positive with further upside potential as well. So this market looks good for further gains. Now, on a longer term basis, I'm not 100% convinced that we're going to get a clean breakout. I think we've had a very strong run since this low around about 6,500 that we saw in April, and we've had a strong run over the past few weeks. And what we've tended to see is these strong runs just fall over around this level of resistance. So we haven't had this breakout quite yet. And even if we do get a breakout, I'm not entirely convinced it's going to be a clean one, because I think there'll be some sort of profit taking that comes in, which induces a correction. You're also coming towards the end of earnings season, so we need to bear that in mind. We've had this strong run, and how much further we can possibly go before the profit taking sets in. Certainly, that seems to have been the case over the past few months on the FTSE 100. We get these moves higher, and you then come towards this level of resistance around this May 2013 high, and then we start to correct back once more. So, as I said, I think we may get a positive breakout today, but I'm not entirely convinced that we're going to break to all-time highs above that 6950 level. Basically, that is my assertion. Anyway, I think I will wish you good luck on that point, and don't forget the two bits of data out today: ZEW confidence, ZEW sentiment, and US retail sales. Which could have an impact. Certainly, retail sales could have an impact for the States this afternoon, and I will speak to you later. Thank you.